What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. It's nice to have you back on, John. How are you doing today?
I'm great. Thanks, Aaron.
Yes, and it was also great to see you at PDAC or PDAC.
Yeah.
You know, it's always nice to go to things like that, especially after how the world's been over the last couple of years. So can you start by telling us what you've been up to since we last spoke and everything that's going on?
Yeah, thanks for having me on again. We just made one appearance, I guess, this year, and happy to have a second year. So, yeah, the conference. Don't know what you thought of it, but they announced that there were over 17,000 attendees. It definitely was crowded and good energy. I think people were a bit measured on the CEO side. That I took probably 20 different meetings in 2 days with CEOs. So people are a little concerned in the junior space right now, and with good reason. I mean, if you're not cashed up, it's a really difficult time to go raise money because there's a lack of interest in a lot of things. It's not just mining, and that's something that I continue to point out to investors is, if you were really interested in Bitcoin at 50,000 plus, are you really interested here at 19,000 or wherever the heck it is, right? It's like, I don't know. I mean, you should be if you have conviction in what you're buying, but it's not as easy of a trade with 80,000 or 100,000 in the distance. Then now you're looking at, well, when am I going to make my money back, right? So it's a different kind of environment we're in since our last interview, and we remain pretty bullish in our mining portfolio. We went very heavy cash in our energy portfolio. I run two of those portfolios, and we were up over 100% in energy last year, and we're over 50% cash in energy right now. I went on Kitco a few days ago and just said that, things are pretty toppy in certain parts of the market, and oil at 120 plus looked like a double top to me. So yeah, we'll see.
Yeah, that's really interesting because the price of oil right now, it's really affecting inflation, and I'm not too sure how long we'll see oil that high, but yeah, that's great. So, there has been a ton of volatility within the stock market. Overall gold and silver have held up pretty well in terms of the price of the commodity. What are your thoughts on the current state of the markets and yeah, just overall?
So, I think gold's held up better than people have expected. I know that the sentiment in PDAC was slightly different because people want a $2,000 price or more, right? So I think if you look at the chart, though, it's made a series of higher lows, as we say technically, and that's very bullish. Silver, on the other hand, has been extremely disappointing because it trades like an industrial metal sometimes and a precious on other days. But as we were talking pre-show, the June 10th CPI read, very, very positive for our sector, which you saw gold, silver, GDX, and GDXJ all rally on that news, which is the first time, maybe second time I've seen that with any authority whatsoever over the last 2 years. So, that's bullish. I've noted to my followers that since May 18th, GDX has continually held that $29 level, which it established months ago. So we've tested, back tested that 28.83 to 29 level now, I think 7 or 8 times. I mean, that's very bullish if we keep holding there and bouncing. And I know it doesn't feel like it right now, but that's exactly what we pointed out to people in June of 2020 when GDX kept holding 32.40. And then it rocketed all the way to 44 plus, if you remember. So I still think there's hope, and I'm betting with my own money. I'm 2% cash in my mining portfolio right now.
Wow, that's really interesting. And yeah, if you look at the longer term charts for gold, they do look pretty good. I feel like people get so focused on the day-to-day moves, especially with investors are becoming less and less patient, especially a lot of millennials. So what are some of the biggest catalyst precious metal investors should be looking out for this year, in your opinion?
So, gold and silver are, as you've said on your show before, a great store of value going back many, many years, right? So like the world knows this. It's just that we're not seeing this give up yet in the broad market. When we see the real give up move, which we're getting closer to every week, where people just sort of throw up their hands and say, I can't make money on Netflix. I can't make money even in Walmart or Target anymore. It's like, I give up. I'm just going to start looking to hedge. This is something that I did, for some of your younger viewers back 22 years ago. I went to my advisor in 2000. I said, why does my tech portfolio look like crap every day? He's like, you need to buy some gold and silver and hedge your portfolio. And so I got interested in our sector 22 years ago, and I've been buying it ever since. But I started with buying the metals, and then I got interested in how we can make more money in gold and silver equities that have leverage to the price of the metals. So, right now, like I said, I'm putting my money where my mouth is. I'm buying gold stocks, some of which are very, very small. A couple of names right now in the gold space. Idaho Champion has had a lot of news recently in April, in between our two interviews here. But basically, they have an MOU, a memorandum of understanding with an Asian company for 9.9% of their cobalt properties in Idaho. If you look at Idaho, I didn't know this until last year, it's a pretty prolific area for cobalt. And when you look at where 70% of the world's cobalt is produced, it's in the Congo. So, I mean, you need to have places like Idaho come online, right? You're seeing this in a company called Jervois right now, where they're going into production later this year. And Idaho Champion has 650 claims directly next to Jervois. And so to me, that's worth a lot more than the share price right now in itself. The share price is 3.5 cents US. So again, you see opportunities like that where they have 100% owned gold properties that got the cobalt property. This is going to work, in my opinion. Another name I just met with at PDAC is Gold Terra. Gerald Panaton, ran Detour, had 800 people under his direction, and had the opportunity to have lunch with him and really get to know the story that much better with a few clients. And I think that, at under 13 cents US here, the pandemic low is 0.111. I mean, to me, when you look back at this, Aaron, 2 years from now, even, it's like, well, hey, I got too cute with it and I missed buying it because I bought it I thought it would go to 11. So I didn't buy it at 13. To me, who cares? It's going to 20 plus, so it's like, you're going to make money, but just don't miss the opportunity. So we teach investors to put out maybe 2 or 3 orders at a time, one closer to the action, the bid and the ask, and then one that's maybe 5-10% away, and then another one that's what we call a stink bid, which is way away from the action. So we know we're going to get filled on something, right?
Yeah, no, that's very interesting. So when it comes to selecting a mining company to invest into, what's your criteria? What do you look out for?
Sure. So I said on your last show, management is huge for us. In both cases that I just gave, Idaho Champ and Gold Terra, those, Jonathan Buick's been doing this 30 plus years, and has a success, elsewhere, right? Gerald Panaton, like I said, Detour, 800 employees, 41 years in the business. Why is he on top of a 13-cent stock? It's very attractive to me. I want to work with people like Jonathan and Gerald, who have done this before somewhere else and maybe had an exit, right? We talked about aftermath on our last program. Michael Williams did the same thing. He invested 29 million in a project, sold it, I believe, to Kinross for 140 million, and so that's really attractive to me. So what is Michael doing now? He's on, Aftermath Silver and Vendetta Mining. That's two of our holdings, in full disclosure, because I'm trying to align myself with people that have, 20 to 25 years at least in the business. They've seen 08, 09. They understand how to navigate markets and preserve cash in a time like this, where they're not just, drilling for the sake of drilling. Because as you and I both know, and many of your listeners, right now, drill results are getting overlooked. And so if you're going to spend all this time and money in the field, you want to make sure you have a payday.
Yeah, definitely. We've seen a lot of drill results just go by and they're fantastic, but nothing happens in the market, or even it goes down. It's like, holy, this is crazy. So, what are your thoughts on the tech space after the big plunge? We don't even say recent drop, we'll say plunge in valuation.
Continuing plunge.
And, where do we go from here? Or what are your thoughts?
Sure. In full disclosure, I'm short semiconductors. I've been short semiconductors almost the entire year. January 5th for me was a really meaningful day because the Fed got super hawkish then, right?
Yeah.
and they have not looked back. When I was being interviewed by Kitco, David Lynn said, "Hey, your opinion on the Fed is somewhat different from just about everyone else I've interviewed here over the last 2 days. But look, I want, like everyone else wants in mining, for the Fed to stop raising rates, of course.
Yeah.
But I've got to tell it like I see it, which is I mentioned that the Fed would. This was pre the June 15th Fed meeting. I mentioned that the Fed would go pretty heavy, probably be hawkish in their comments. Exactly what happened. July, you now hear Powell commenting on a 50 to 75 bit move. That's not going to be good for people that have adjustable rate mortgages, car loans, credit card debt, etc. So I think that the economy is in trouble, and we've been investing accordingly. I think that this is not going to be like we've seen for the last 13 plus years, where we get these bounces that are real. You could mention the bounce of September going into December of 18, right? That December 24th 18 low was down 19.9 on the S&P, and it bounced super hard and it never looked back, right? And then we had the correction in March of 2020. It fell precipitously but bounced very sharply, what we call a V-shaped recovery. This time it's not bouncing. So that's the difference, is you get these head fake bounces for maybe 1 to 5 days, and then they get faded.
Yeah, that's exactly what we've seen, and everyone's trying to call the bottom, but do we just continue to drift sideways to lower? It's kind of looking like that right now, but we'll see. So although inflation is running rampant, gold has still not seen the big run many investors are waiting for. Can you give us, some insight as to why, or your thoughts on that?
Yeah, I mean, like we said, it's very frustrating when so many smart analysts and firms have been saying $2,000 gold, and we barely got there for a minute, earlier this year, and then bounced right off, right? So that 1950 to 2000 range is pretty significant resistance. Just as we've said all year, with that silver has got major resistance at 30 and quite a bit of resistance at 28.50 now. So, look, I own both of those things. I want them to go up, but I've got a responsibility to investors to tell them, hey, it's going to take longer than we expected. And so are you cool with that? If you're not good with it, you've got to go, and you got to go with cash, and you got to sit there and wait and be patient. But for me, I think, you've got to bottom fish here and just continue to build some of the names, like I mentioned, on weakness. When you see a big seller out there, take advantage of it. It's like, there's people that are selling for various reasons, right? If you lost, 50% in Bitcoin and you've got a margin call, you're going to be selling everything you can, right? Like, so you're going to sell things like junior stocks that you don't want to sell at these prices, but have to.
Yeah, exactly. So do you have any advice for our younger viewers? Because there's a lot of younger viewers in this type of volatility, losses they probably haven't seen before.
Yeah, sure. So, I started investing when I was 18. I started working at Merrill when I was 21. I totally get it. I started with nothing in my pocket. I grew up pretty poor, and that's why I think, starting off, I'll just say that, anyone who's interested in learning more about our services, whether it's our updates or our newsletter or whatever, I'm happy to try to work with you within your budget. We try to be fair to everyone and kind of work on the honor system, Aaron. So like, if we do a good job for them, we're communicative, then they can pay what the retail rate is down the road, if they're just starting out. I've got some grad students and some college students and such that are part of our network. I said on your last show that, you've got to partner with a financial advisor, and that was good advice, right? Because if you did that, you would have hopefully had someone guide you a bit through this mess. But I would continue to say that, I worked over 25 years with financial advisors. There's some good ones and some bad ones, but there's a lot of people that are very smart, and they can help you with making sure that your decisions are, what you want and what you intend. So, whether that's, here's the rub though, right? Like, financial advisors will draw the line in the sand at a certain dollar amount. Some of them at certain broker dealers don't even get paid if they work with you under a certain dollar amount. So you have to ask those kind of questions, like, what's a meaningful client to you, Mr. Jones? What kind of communication can I expect from you? Don't be afraid to ask those questions, because, it's your money and it's important. So But really it's partnering with people that have expertise in whatever, right? Whether it's mining or energy, maybe I can help. If it's healthcare, someone else can help. If it's tech, someone else can help. I mean, you've got to find experts in the area that aren't necessarily free, because free usually doesn't work. Free is like you watch a show, they tell you what to buy, and then they never tell you when to sell, and then you're left holding the bag, as we say. So we're very transparent with everything that we do. We're telling people, here's our buys, here's our sells. I will put out updates when I see them real time, like on non-farm payrolls, GDP, the Fed, of course, and I think that, from our feedback, that's helpful.
Yeah, that's great advice. So thanks a lot for all that info, John. It's always a pleasure speaking with you. Love discussing gold, silver, and everything in between. So we'll have to have you back on soon.
Appreciate that. Thanks for having me.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.